everybody. Thank you for tuning in to Paving the Wei. I'm here this episode with Dr. I'm going to go with Stylianos. I've been given the shortened version. Stylianos Kampakis. Thank you very much for joining me. Sorry, I should have said CStat at the end, of course, because you are also a chartered statistician. Yeah, I can't say it.
No worries.
Statistician. Thank you very much for coming on. I don't know if you want to give a quick intro to who you are, what you do.
Mm-hmm. Yeah, sure. So I'm an AI, data science and tokenomics expert. My primary field of expertise is data science and AI. I've been in this area before it was cool. I have a PhD in machine learning from UCL, written 3 books. So yeah, I've been there since the early days, before the ChatGPT craze and everything. But I'm also very active in the area of tokenomics. I've been working in tokenomics since 2017. I was one of the very first researchers in this area, and since then I keep doing research and being active in both as a researcher, but also as an advisor / consultant. So that's me in a nutshell. I guess most of the things I've been doing are around startups. So I really love working with new companies, startups, and growing companies as well, and scale-ups, and really help them understand how they can best use AI and data science.
Okay, yeah, it was actually, I suppose we should get the AI bit out of the way, because I think you can't get away with not mentioning AI during this hype cycle. But we did actually meet at an AI event put on by the Tech Disputes Network. You did a fantastic speech on, I guess it was the sort of the history and potential future of AI. Do you want to give us a little bit more information about that?
Yeah. So I've released a new book like a few months ago. I think it was in June, about the past and the future of AI. So the book primarily focuses on the history of AI and uses this as a stepping stone to create a narrative as to where AI might be heading towards to. Obviously, when I started writing the book, I hadn't foreseen that things would actually move so fast, even if I'm in this area. I think ChatGPT really surprised many people in the AI space as to how effective it is. That being said, with regards to where we're heading, I mean, there's a very big conversation, because the AI is clearly going to change many things in the way we conduct business, in the way maybe we even go about our everyday lives, and it's definitely going to also bring some monumental changes to society as a whole. So that being said, I guess to properly answer this question, it really comes down to which area you want to focus on. But I guess something else that's worth mentioning is that AI is moving so fast, it's developing so rapidly, that it's difficult really to make accurate predictions. So you can, I guess, make some predictions around the general trend and how it's going to be adopted by different industries and how it's going to play a role in different parts of our lives, but it's difficult to figure out what exactly this is going to look like. In that respect, it's probably similar to other transformational technologies, like, for example, the internet, where you knew it was something important, but maybe you wouldn't have been able to foresee the creation of Facebook, when the internet first came into our homes sometime probably mid-90s, I guess. Depends on the country which we were living at. So yeah, I guess these are my the first thoughts that come to my mind.
So are you able to tell us your sort of predictions, or is that saved for people who are buying the book?
Well, some of the, let's say, main predictions in the book were around the fact that AI as well as data science are going to make it, are going to disrupt primarily industries which can be automated or industries that rely on prediction. And obviously this has, obviously there are some economic implications there, but it's just difficult to predict what the implications are going to be on a wider scale. So with regards, job creation and distraction is something that's being discussed a lot these days. We've definitely seen both of these. So we've seen some jobs like customer support being replaced by chatbots, and we're definitely going to see this continue in that direction. At the same time, we have seen some new jobs like prompt engineering, which I'm not sure how long they're going to stay around for. It's quite interesting. However, something which we can be sure of is that AI, like every professional will need to become AI competent in the near future. And it's as simple as that, because it's going to be, like the ability to know how to handle spreadsheets or documents. So because these are, let's say, some of the most, some of the changes we're going to see, not changes, some of the effects of AI in our professional and personal lives in the next few years. Like, in terms of some more wild predictions, I think the entertainment space is something which maybe I should have included in the book. And I mean, it's something that I didn't, I actually started thinking about this after the book was published, so maybe it's going to become part of some kind of second edition. But I think we're going to see a massive disruption in the entertainment space through the use of generative AI in everything, like from music to movies. Like those people that have been striking in Hollywood, I'm really sorry for them, but I don't think there's a future where most of them are going to be around in 5 or 10 years. Imagine the future where the next Netflix is just going to be some generative AI company where you can say, I want to watch a movie with these people in, whatever plot, era, whatever style of movie, thriller, action. And the AI will just create a movie for you, right? Obviously, this is very computationally expensive to do now, but I'm pretty sure someone's going to do it in 5 years or so. Okay, maybe 10 at most.
That'll be fascinating. I think personally, I can see it as perhaps an alternative to the way things are done now, but I just can't see it going away completely. I don't know. Maybe it's just me, but you. I was reading up on your LinkedIn profile earlier, and you've done a lot of work as a data scientist. Now, for those of us at home, what is a data scientist?
Yes, I think a data scientist is a term that has changed meaning slightly over the years. As in, when data science first broke into the mainstream as a term, this was 10, 12 years ago, and it was essentially a term created to encapsulate many different disciplines in the space of data analysis, from machine learning to statistics to pattern recognition. And then for a few years, it came to mean anyone who would do anything with data. Now this term, at least in the job market, now what we've seen is some kind of fragmentation in terms of different roles. And data scientists now, the term data scientist has come to refer to someone who is primarily focused on modeling, statistical modeling, predictive modeling, in contrast to a data engineer who is focused more on databases and data pipelines, or like some other more specialized roles like MLOps, dealing with model deployment monitoring, or like data analyst. There's also now another job title, machine learning engineer, that refers to maybe a data scientist with a stronger background in software development. Again, it's something interesting which has happened in the market, this type of fragmentation. But if you ask me, I don't think it's very meaningful, as in, I come from an era where you kind of had to do everything. So I don't see these things as really separate. It's just like the tech market likes to come up with new terms and distort, responsibilities. I guess maybe there's a reason to do that. I guess in certain cases, it makes sense if a company has the resources to have people to do very specific jobs. But then, being said, I don't think there's any, substantial difference. I still hope the term data science is going to stick around, because I think it's a very good term that encapsulates a large part of, whatever tools and methods we have to analyze data and extract insights from data. And I think it has been a very good catch-all term for many, many years. And I still think it's a bit different to AI. AI has become somewhat synonymous with large language models these days. And I kind of think we need both. So I just hope there are not going to be any misunderstandings in the industry as to what each one of those terms mean.
Oh, you can guarantee there are going to be. Isn't that just the way of things? It's like AI, of course. And what you were saying in your talk at the TDN, that AI encapsulates so many different terms.
Yeah. Yeah, that's correct. It's the same with data science as well. So I guess AI is more of a vision, like that's the thing. So AI is more of a vision of creating a data-driven future. Whereas I'd say, data science is more of an umbrella term for different disciplines in the space of data analysis. And you could even include AI into that in certain ways, depends on how you approach it.
Mm-hmm. And you're also the CEO of the Tesseract Academy. Now, I had to look up what a Tesseract is. And after going down a half-hour rabbit hole, I'd say perhaps slightly cynically that I'm no wiser, but I did my best. A 4D cube. Oh my goodness.
It's a 4-dimensional cube, yeah.
Yeah. I got about that far, something about the W-axis. And yeah. So what's the Tesseract Academy then?
So it's a company whose mission is to help leaders and decision makers understand how they can best use emerging technologies, primarily AI, data science, and Web3. So we do a couple of things. One is we have educational material and we run programs for leaders, entrepreneurs, managers who want to learn more about those topics and understand how they can best use them to advance their career. On the other hand, we also offer consulting services to those companies that want to that want to grow through AI and they need an AI strategy and someone to implement it for them. We do a lot of work with startups, but we don't shy away from bigger companies.
Mm-hmm. Actually, that's one thing that I want to come on to, because the reason I wanted to talk to you on Paving the Wei is because of your work in tokenomics. But I'm interested to know how on earth I don't know, did you make a shift, or how on earth did you get into sort of blockchain and tokenomics from data science and AI?
Okay, that's an easy one. So at some point in my career, I was very interested in a field called complexity science. That was a field that was trying to model, essentially the focus of complexity science was to model complex systems. Okay. And I did a bit of research in that area, but eventually abandoned it because it was never really too mainstream. And the original innovators behind that area were obsessed with traditional economics. They were trying to revolutionize economics. Yeah. So then tokenomics became a thing. And I realized that all these theories, all these tools that had been used to study traditional economics, but never broke into the mainstream, could actually be used very, very effectively to model tokenomics. Actually, way more effectively, because the problem with economics is that there are a few different problems. One of them is that it's a system that suffers from many externalities. There are also politics involved. But in tokenomics, the system is more constrained. And in most cases, if you're studying a token economy in the early stages, we're just working directly with the founders of a startup, right? You're not working with the Prime Minister or the Bank of England. So I started just really doing my own research in that area and writing just blog posts saying, guys, there are all these tools and actually I think that they could be applied there. And there was no one doing this back then, right? So 2017. So actually my main broke out into the mainstream of tokenomics simply because I was probably the only game in town the first few years. And I just found myself doing work in this area out of nowhere. So, and then I just kept going and kept going. Now I'm a member of UCL's Blockchain Center, and I'm even asked to represent the British Blockchain Association at a roundtable organized by the FCA on the topic of stablecoins. So I'm like, okay, it looks like things like have worked out for me in that area.
Yeah, for sure. So again, for us at home that have no idea what we're talking about, could you give us a brief overview of what tokenomics actually is?
Yeah, so it's tokenomics deals with the study of token economies. So for those of you who are new into the blockchain space, you probably heard about different cryptocurrencies and tokens and things like that. So all of these are used to create artificial economies on a blockchain. So I say artificial as in, the real economies is just they stay outside of the fiat economies, we call it, just like as well as the real economy. So you can use this to exchange services and whatnot. And essentially, the tokenomics deals with how can you optimize the token economy, usually to achieve a certain objective like token appreciation, token stability. So it's not much different. It's not much different from real economics in that sense. It's just, let's say, a different application. But obviously, some of the laws in real economics that don't apply in tokenomics because, again, the domain is different. So you wouldn't, for example, talk about, I don't know, laws around unemployment in that case. That's not really a relevant question. But some other stuff, like essentially some of the theories in macroeconomics that deal with inflows and outflows, they're not too dissimilar in the space of tokenomics.
Okay. And you are a tokenomics advisor, consultant, I guess. Could you, where possible, I suppose maybe you can't divulge quite a lot of information, but maybe you could give us some examples of the people that you've advised on tokenomics areas?
Yeah, it's usually early stage startups, like at the pre-launch stage. So, I mean, there are different clients. I mean, many of my case studies, they just open. You can just like find them on my personal blog, the datascientist.com, as well as in journals. I usually publish in the Journal of the British Blockchain Association. So you can find a lot of stuff there. These days, I'm also an external partner at Hacken, which is a smart contracts auditor. So I do a lot of work with them as well. But it's primarily early stage ventures. Like they want to make sure they figure out how the token economy should work before they launch.
Mm-hmm. I have to say, actually, the Hacken website was particularly helpful for helping me come up with these questions today. Maybe you wrote the page that I was reading, in fact. But so tokenomics is, for any of us in the Web3 space, we've probably come across tokenomics in some form or another. Usually it's sort of displayed by some kind of pie chart, and it's the distribution of tokens on the initial coin offering or whatever. But if, let's say you've got a startup coming to you and they're releasing their own token or coin, what would you say are the very key points that a company needs to consider when coming up with their tokenomics?
Yeah, I mean, there are a few, right? First of all, what's the goal of the token? That isn't what is it actually you're trying to achieve. Secondly, what levers you have to affect demand. Very, very important. And third, how does the token economy work in terms of inflows and outflows? That is, if a company was, let's say if a token economy was, let's say, like a real country, how would the economics work? As in, would you be trading at a deficit or a surplus? Like, you do need to fund the token economy from somewhere. So you have to think, okay, where am I getting my money from? So ideally, users want to provide maybe some fiat currency or a stable coin in exchange for some service which they consider valuable, right? So this type of, so these are like some of the basics. And some of the most common mistakes I've seen is, not really having a proper understanding of the inflows and the outflows, and being like, oh yeah, the token somehow is going to appreciate in value, and being somewhat oblivious to how the inflows and the outflows, they work synergistically to determine the price of a token.
That's fascinating then. So I can understand where you, for example, have a fiat-backed stablecoin. So it's one for one. You hold the British pound or the US dollar, which you are then representing in token form and then putting out on the blockchain. But let's say somebody just creates a token out of thin air. I mean, I don't know. I don't know how these meme coins work, but I'm going to assume something like Pepe or Doge doesn't actually have anything backing it, at least at the initial offering. So how would that work in terms of inflows and outflows?
Well, the thing with meme coins is that they're not really based on anything other than belief. So there are inflows which are based on speculation, which is actually pretty dangerous if you ask me.
Yeah.
So that's the thing. So if you ask me like how it's working, I'd be like, magic. I mean, it shouldn't work in theory. It does. That's right. It's speculation, right? So yeah, I mean, I'm not a big fan of meme coins. There's no really proper way to analyze them. It's pure gambling. Obviously, if you're in the communities and you see, the support that some of those meme coins can get, you can predict some of these market movements before they happen, right? But that being said, there's no real reasons to why this should happen.
Yeah, I got to say it's not one of my favorite things, but it'd be interesting to hear from you how you think that differs to something like Bitcoin, which on the face of it, to anybody coming in, would be exactly the same. It seems to be born out of nothing. Each coin, without any knowledge of perhaps the proof of work consensus, it still appears to be born out of nothing. Same with Ether. How would you say that they differ from meme coins?
You mean Ethereum and
Ether and Bitcoin, things like that.
So Ethereum specifically has many applications, right? It's a whole layer. It's for decentralized applications. So this is where the utility is coming from. Bitcoin is also different from a meme coin essentially because it's still based on belief. It's tested with the original one. Essentially many other coins like Litecoin and Dogecoin, they're just variations of the Bitcoin theme.
Mm-hmm. That's fascinating.
Yeah. So there is a world where, Dogecoin reaches a level of popularity and consensus that, it's also a store of wealth. Some people might argue it is. I try to stay away from meme coins, but,
Yeah, and I personally will as well. You mentioned utility there, actually. This was one of the things that really grabbed me about tokenomics, that certainly everybody's saying that the coin or the token has to have some sort of utility, and that can come in various different formats. What would you say the importance of utility is, and maybe you could give us some examples of the utilities that you think have proven to be the most effective or the most popular?
This depends really on the project, right? So utility is, for me, synonymous with it's not synonymous, it's very similar to the unique value proposition. So like you have to provide some product or service which people want to buy. It's as simple as that. So maybe, I hold the token and I get certain perks, I get access to certain services. Like if someone just looks into the top 20 or 30 projects on CoinGecko, they'll see some examples of that. Some of them will actually be layer ones. So it's actually, you need to hold the token in order to access the functionalities of that layer. So it's like a passport, okay? But that's just it, and it's just that in the Web3 space, because there's so much speculation, there are people that have made money without really delivering any utility, any real value to the community. And they just became rich, and the projects they managed to attract a lot of capital within a short period of time, simply because everyone believed that something would happen. Okay, but obviously that's not sustainable in the long run. So that's why eventually these things crash.
Okay, so utility is something that's necessary in order for a coin or a token to stay around, as it were.
Exactly.
Okay. So what would you say are actually, going back to the layer ones of Bitcoin, Ether, I don't know, Cardano, things like that? How obviously the coins in terms of those layer ones, they have that utility because, like you say, it's a passport for the use of the system itself. You need Ether in order to make transactions on the Ethereum blockchain. How do you think layer twos are going to affect the layer one coin's utility in this respect? If we see sort of a growth in the use of Polygon or I don't know, let's say some ZK rollups and things like that, do you think we'll see a degradation of the utility of layer one coins?
Good question. I would actually have to do a bit of research to be able to answer this, because I'm not sure how much like Polygon's usage interacts with Ethereum's tokenomics, right? Because Polygon is built on Ethereum. So I've not done as much research on layer twos to properly understand how they're affected. I've heard more conversation around the other part, as in how layer ones becoming faster and cheaper might actually push layer twos out of the market, but I'm not sure that's true either. And the thing is, I've not actually been in a conversation around building for a long time now, simply because we're in a bear market. So, during a bull run, there's so much competition in layer ones trying to attract projects where these conversations happen all the time. So they're like, oh, where should we build? This is getting better. This is faster. This is cheaper. Actually, I realize I've not been in conversation of that kind for quite a while now.
Oh, I'm so sorry about that.
Yeah.
Hopefully we're going to see our luck change at some point. What would you say are some of the most successful token launches that you've seen, and why would you say they were?
So successful token launches. Good question. I'd have to go back to some of my notes, because I remember during the last bull run, we studied a few different launch pads and some initial token offering models, and there were a few successful ones. But again, in terms of me participating in any of them recently, and I think it's because of the market conditions. I don't think I have anything in mind. I mean, they're obviously the ICO days. So during the ICO days, 2017, 2019, there were many, many, many examples of successful token offerings, right? But this model is now dead. So I remember speaking with a company a year ago. They raised 50 or 100 million during an ICO. And now they're still operating, but no one knows them. Like, the token didn't even go up during a bull run, and I don't think that they're ever going to do anything, to be honest with you. And the thing is, the ICO model was just so easy to raise money back then. So I think it was easy for anyone really to, even without a product, to do that. And now things have become more complicated. Also, the thing is, in terms of token launches, it's now many startups are going for a mix between, early stage investment and VCs, and then they might do a public sale with a smaller with percentage of their overall token supply. So it's not like it used to be in that sense.
Do you think that's a safe way of investing, actually? If a VC wants to go in on a new token, is to have a cut of the ICO? I mean, I suppose, if you're investing in it, you'd have to have some confidence that it's going somewhere anyway. But I mean, with things as they are at the moment, do you think that's the best way through?
It depends. The thing is that if you have equity at a startup, then you need to somehow make something with it, like sell it to someone else down the line, or you expect there's going to be some dividend, or you expect a company to IPO. So now in crypto, you have this weird blend between tokens and equity. So it's really down to which VC to make sure they make the most out of it. In certain cases, actually, equity maybe didn't make much sense for certain cryptos, and there are many, many examples of companies successful in the crypto space where, for example, in terms of bonuses to their employees, they give tokens. They don't give shares like it happens with big tech. So again, I think it's more of a case by case basis, to be honest with you.
And I suppose, I think the answer to this one's going to be quite easy, but what do you think are some of the most unsuccessful token launches?
Again, there are many that have tanked. I guess the majority of them have tanked, but I don't have. I'd have to go back to my notes to find specific examples. Usually what concerns me the most is not necessarily token launches per se, but more like token sustainability. You know what I mean? Like, for example, look, Axie Infinity is a good example, because I just studied this case study because of my work in tokenomics auditing. I mean, in terms of a token launch, there's nothing spectacular about it. They just had a nice game, and then during the metaverse craze, the price went 50 or 100x or whatever, and then it crashed because the tokenomics were flawed. So in that case, you could say the token launch was successful but unremarkable. You didn't see anything out of the ordinary. You could say that up to a point, the business plan and the tokenomics seemed to work amazingly well until they didn't. The problem was they were oversupplying their token because they were giving away too many rewards and they hadn't taken this factor into account that they were oversupplying.
Okay, so some kind of, in order to sustain your the model for the token, and I suppose the price, at least hopefully it doesn't go down, but you're saying that there needs to be some kind of constraint on what's released?
Yes, absolutely. We're talking about balancing the demand and the supply, right? So if you're just supplying too many rewards, then you're done effectively. It's there's no way around it.
Mm-hmm. So it's one thing that interests me is the difference between, for example, going back to Bitcoin and Ether. We know that there will always ever be a maximum number of Bitcoin, or there should be with the original chain. But Ethereum, of course, is an unlimited supply. But I think they're now looking to implement a deflationary model, if they haven't done so already, where there will be some kind of burn mechanism. Do you have any thoughts as to the differences with the sort of supply and demand model between Bitcoin and Ether?
Yeah, so I think restricting supply should increase the price of any token, really, of any coin in the long run. So this definitely makes sense. I mean, we've seen this theory. I mean, it obviously, it works like from an economic standpoint, and we've also seen it in Bitcoin. And now, as to what the price will actually be like, it's difficult to say because because also all cryptocurrencies, they usually valued at a multiple, and there's no a multiple. I mean, it's a bit weird. Like there's no proper valuation method, but essentially they're doing a bull run. You can understand there's some kind of multiple being applied, so it's not easy to say, oh, this is what the price is going to look like. But this definitely, like this type of deflationary pressure, all else being equal, it does affect the price.
So we were speaking earlier about what led you to tokenomics. Do you find that there's any way that tokenomics and your work in data science, and to a point perhaps AI as well, do you think they intertwine at all?
Yes, absolutely. I mean, that's actually how I got into tokenomics, right? So I just realized that many of the tools I was studying in complexity science can be applied there. So complexity science, you could argue it's like part of data science, even just maybe not as mainstream, really. So there's nothing, extraordinary about it in that regard. And actually, and tokenomics, I would say, is probably one of the few areas in Web3 which are really about data and models. There might be some other areas like, analyzing transactions in networks and things like that. But yeah, I wouldn't say they are like uncorrelated.
Mm-hmm. Actually, in that regard, I was reading on your website that you were perhaps one of the first to not speculate, but perhaps prophesy the rise of NFTs.
Yeah.
Do you want to tell us a little bit more about what brought you to that conclusion?
It just seemed to be an amazing piece of technology when it was released. I mean, I immediately saw that there are going to be multiple applications, especially around art. I had published an article that it's actually timestamped on the Journal of the British Blockchain Association, where everyone can see it was actually before the NFT craze. And yeah, it's just as simple as that. Even though I think in the long run, the real value of NFTs will be around proper, let's say, not so much around speculation, but around things like, real estate, titles of ownership, and things like that. So I do think it's a very interesting piece of technology. It's just that, like many things in crypto, it was maybe somewhat abused and exploited for the wrong reasons.
Well, like anything in crypto, for sure.
Yeah.
Interesting you bring up real estate. Of course, there was that event, I think maybe a year or two ago. I can't remember the exact details, but there was a big hoo-ha about a house being sold on OpenSea. and everybody going crazy about this is the future of real estate. And it turned out that actually it was not the sale of a house, but in fact, it was the sale of a limited liability company, which had the house as an asset because of the way that house transfers work. You can't do that yet via the blockchain. So how do you see, a lot of people, of course, are talking about real world assets being tokenized at the moment. Do you see that happening soon? Do you see that being an easy or a difficult thing to get moving? Or,
to tokenize assets?
Yeah.
Well, from the viewpoint of the technology, the nuts and bolts, I don't think it's difficult. But then you have all the other aspects around it, like legal issues, like how does this plug into government, right? And the existing infrastructure. That's really the problem. It's not like we're talking about quantum computing. It's not like we're talking about, you know what I mean? Like some kind of crazy technology that's not there yet, and we're speculating about it. But it's so I think we're going to eventually see it eventually. It's just the roadblocks are not so much about the technology, it's about a lot of other stuff.
That makes a lot of sense, actually. I mean, we have seen a blockchain, I guess a tokenized version of the Californian version of the DVLA for driver's registrations to be recorded on a private blockchain, which I think it was a privatized version, not privatized, but private version of a Tezos fork, I think. So perhaps maybe there is some way of making it happen quite easily just by having private versions of the blockchain rather than having to rely on public.
Oh yeah, that could be it. Then again, with I don't know, titles of ownership, maybe you do want to have something in the public so it's verifiable, but just encrypted. I don't know. Maybe that's like one solution to it.
Maybe we'll have to see. I keep thinking the first one to do it over here is going to be the land registry for sure. It has to be. So we were saying that you prophesied the rise of NFTs. There are many people thinking that we're going to get another NFT craze. I mean, whether we will, or maybe it would be something else that is associated with blockchain. Do you think we'll see another rise of NFTs? And if so, what do you think is going to be the catalyst to bring it back?
Yeah, a bull run, probably. We're definitely going to see something like that. I think it's going to be a bull run. I'm not sure we're going to see anything different. We're definitely going to still see some speculative art and things like that. And I think that's
back to art.
Catalyst. Yeah, I think that's going to be the catalyst.
Interesting. Well, I think that pretty much sums up all my questions on tokenomics. I don't know if there's anything that you think I missed that perhaps we need to shove in.
No, I think we covered quite a lot of ground today, actually.
Yeah, for sure. It was. It's one of those topics that you come across as a general user, but once you really get down to it and think about it, there's a lot involved, and it's been fascinating to see a lot of discussions and arguments about, for example, ICOs and how coins and tokens are divvied up between, for example, the developing team and other employees and then sort of the general public. I mean, and one of the ones that came up as I was investigating today was governance tokens. I find quite an interesting topic because we're looking at the democratization of companies and the governance of companies via the blockchain. But do you think, I mean, what are your general thoughts on governance? Do you think that it's a true way of democratizing leadership and management of companies, or do you think it's maybe just a bit of a facade?
It's interesting. It's an interesting concept, but it's a bit of a facade because it's not as easy to have some kind of direct democracy. That's my personal opinion. Like I remember hearing some statistic about DAOs that most of them, there's really not much participation. It's only 5% of the people who participate. So I don't know how far this concept can go.
Yeah, for sure. I mean, one I've been following, I'm very interested in the Zilliqa blockchain and their governance token GZIL. I'm not sure about how distributed their token is, but they're having to come up with a new voting model because their turnout numbers are so low that now they're going based on an average on the last percentage of people to turn up and vote, which is, it's quite upsetting in a way, I guess, if that's what you're trying to achieve, is some kind of democratized governance. But we'll have to see. Maybe the bull run will change things again, at least temporarily.
But let's see. I mean, I think it's also human nature. So you still need. It's not so much a question for the technology, but you do need to get people interested in governance on some level. That's the problem.
Yeah, for sure. Well, maybe we will see some increased adoption at the next bull run in some sort of format, but I think nobody can make any kind of speculate. Well, we can speculate, but who knows what form it's actually going to take. Well, I have to say, it's been a really fascinating discussion, Stylianos. Thank you very much for coming on. And thank you again for that fantastic talk at the TDN. Going to have to try and show up for more of those. That was really, really insightful. And free as well, which was the best thing. So is there anything you've got coming up that you'd like to share? Anything that we should be looking out for?
Sure, yeah. So if anyone's interested in tokenomics, just make sure to reach out to me on LinkedIn or go to my website, datascientist.com. If you're a senior professional or a leader who wants to learn more about AI and Web3, we're currently running a free pilot of our coaching program, so you can just join. It doesn't cost anything. Just make sure to go to the Tesseract.academy website and feel free to just shoot me a message, and more than happy to meet you.
All right. Well, I really appreciate your time, Stylianos. Thank you very much.
Yeah, thank you.